Welcome to Market View with Ike Iosa and Friends. The show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Listen, good morning. Mike Iosa, your host for Market Views. Today's guest, my very good friend, Mrs. Erin Swenlin. Hi, Erin. How are you?
I'm good. Definitely an interesting market out there.
Yeah, it sure is. And depending upon how we finish today, Friday, could very well be the market's going to be up 15 out of the last 16 weeks. So I'm curious to hear your thoughts on the technical state of the market.
It's been really interesting. And I know we talked a little bit about just watching this market inch upward with no real declines. I mean, we've had a couple of declines, but they really haven't turned into anything much at all. And so now it's just trying to figure out, well, what's actually going on under the surface? What is there technically that'll give us a little more of an idea of what's going on? And I have a few ideas that I'd love to share with you.
Okay, we're listening.
Okay. So I've got the first chart, which is a 1 year of the SPY. And what I want to point out on this chart is the very last window, the relative strength for the SPY versus RSP, which is the equal weight version of the SPY.
Yeah.
And by comparing the two, we can really see where the leadership is and isn't. And what I found really interesting is that we are starting to see underperformance by those mega caps, at least in conjunction with the overall indexes as a whole. So it tells me that we are losing this leadership, but yet the market is still going up. So what is going on under the surface? I think that what we're starting to see is rotation, interestingly, out of these large caps and mega caps, but rather than pulling the money completely out of the market, people are rotating into things like small caps. We're starting to see some interesting stuff under the surface, which brings me to my next chart. And this is the Swenlin trading oscillators. So they've really not been very helpful, to be perfectly honest, because they've been sort of up and down and around with the market and really not giving us a sense of what's going on under the surface. But what is telling us what's going on under the surface are those last two indicator windows. And you can see that the broad market as of yesterday just spiked as far as PMOs rising and stocks moving above their 20-day EMA. So even though those mega caps are starting to show some weakness, money is not going out of the market, it's staying in, and it's going into the smaller caps. Obviously, what we're seeing is a move out of those mega caps into those smaller caps, if you will, within the S&P. But mainly, seeing this expansion tells me that the rotation is not just into those mega caps, they're rotating out of them. And rather than out of the market, they're staying in the market. And I find that to be a really interesting situation. And it brings me to my next chart.
Okay, the ITBM.
Yes. Now, again, the actual indicators themselves, that Swenlin trading oscillators, the ITBM and ITBM have been all over the place. And it's not really very helpful. It is helpful in that we do have negative divergences that are very obvious. But the last indicator window, we're starting to see more PMO buy signals now within the index. Not as many as I'd like. I like to see that percentage over 50%. So we're not quite there. And the big problem with this indicator is that we do have a very deep negative divergence. When you think about where we were in price back when we had these top in that indicator, in late November timeframe, and you know where we are now price-wise, I mean, that's a huge move to the upside, a big rally, and yet we're not anywhere close to having as many PMO buy signals as we did previously. That's a negative divergence that we have to worry about.
How about our next chart, the bias chart?
All right, so with the bias chart, we are seeing some good participation. I mean, you cannot deny the fact that we have over 50% of stocks above their 20, 50, and 200-day EMA. That's a good situation to have. And we did see expansion, like I said, in percent of stocks above their 20. This hasn't, of course, helped our Silver Cross Index. Our Silver Cross Index measures how many stocks have a 20-day EMA above a 50-day EMA. We consider a 20, 50-day EMA positive crossover a silver cross. And so the Silver Cross Index tells us that we're still losing stocks with 20s above their 50. And given that we don't have as many above their 20 and 50-day EMAs as compared to the Silver Cross could continue lower. So that, again, is another internal problem that we're monitoring to make sure that, that we're going to continue to get this rally. And these negative divergences are what are keeping us cautious. But our best plan of attack at this point is to set the stops, trailing or otherwise, set those stops, and let the market stop you out. I mean, we can't fight the fact that we're getting this nice rally, and we shouldn't. We shouldn't be selling all our stocks because things are starting to look a little iffy under the surface, if you will, with these negative divergences. It's not enough to me to be selling your positions. Really what we need to do is tighten up those stops or set them in a nice area based on profits that you already have and let the market stop you out.
Now, our next chart is XLE, the S&P energy sector. And I'd like to share something with you, which you have seen it. As of last week, the entire S&P energy sector had a market cap of about 1.5 trillion and net income of 147 billion. Nvidia had a market cap of 1.7 trillion and a net income of 19 billion. In my view, this is one of those things when people look at these numbers a few years from now and they're saying, what the hell were we thinking? If I had to choose between the two, at this point, I'd rather be long the energy sector than Nvidia.
Yeah, absolutely. This is what's so interesting about this market with those mega caps really pulling things upward. So like I said, we're now starting to see some weakness there. So it should be interesting how we move forward. But I have to say, energy really making a move. Crude oil looks like it's ready to break out. It's trying for its fifth time, I think, to break out. And I think the fifth time will be a charm. This time around for crude oil, I think we will get that breakout. And that will likely give us a breakout in energy. It is getting close to overhead resistance, which is a bit of a problem here. But really, when I look under the hood at this chart, there is a lot of good things going on with energy. I mean, the obvious things are the RSI, which is positive, the PMO, which is surging above the signal line, stochastics, moving up. All of those primary indicators look good, but really what sold me on this sector was the Silver Cross Index. Kind of a different look than the Silver Cross Index on the S&P.
Yeah.
I mean, this is showing some serious movement to the upside, a nice thrust, and we're getting a lot of stocks above their 20 and 50-day EMA. And so that should keep that Silver Cross rising and moving even higher. And that tells me that energy should break out here.
Our last chart is the diamond of the week, that is OKE, which is an energy stock.
Yes, so since we're talking energy, I figured I should bring a diamond of the week from the energy sector. And I have to say, there are a lot of good choices within this sector. But one of the areas that I'm looking at in particular are pipelines, which are breaking out. And you can see ONEOK doing exactly that, breaking out on a nice, strong rally. The nice thing about this stock that I like is that it is not overbought. The RSI is certainly getting close, but it is not overbought. So we could see higher prices come in off of this very strong rally. The PMO is accelerating above the zero line. You've got to love that. and stochastics have popped above 80, and really what you want to see are stochastics staying above 80. When they're above 80, you've got internal price strength, and that's what we're seeing right here. And then really for me, when you have to pick something from the bunch of stocks that are out there, you need to look at relative strength. Relative strength for the group is starting to pick up, but the nice thing about it is it's a consistent outperformer against the group itself. So if you're going to go into the pipeline group, this is the stock you want because it is showing that relative strength against the group. And consequently, it's now starting to outperform the S&P. So I think this one's lined up for more rally ahead.
Erin, anything else you'd like to add?
I would just say that if you are interested in these charts that we're showing you, I have 2 subscriptions, the DP Alert and DP Diamond. The DP Diamonds give you those diamonds of the week. I give you 10 stock picks and ETF picks a week. The DP Alert is where you're going to see that Silver Cross Index and where we cover the sectors as they have their signal changes and cover Bitcoin, the dollar, gold, a bunch of other things. So that would be our DP Alert. And if you want to try them out for free for 2 weeks, all you need to do is use the coupon code DP Trial and the number 2. So DP Trial 2, and that will get you 2 free weeks of our DecisionPoint Alert and DecisionPoint Diamond.
Erin, thank you. Have a great weekend.
You as well. It's been a pleasure.